When you first get started investing, your expectation of how your portfolio will be growing might look like this, but this is the reality. There are lots of ups and downs when it comes to investing. Even with that, I believe in the power of investing, and this is how I am striving to build wealth for retirement and early retirement. Today, I'm going to share my investment into FXAIX, which I am currently up 36% on. So stick around for the next few minutes while I show you why I added this into my retirement account, how big tech giants like Google and Tesla are tied to this fund, and how you can get started on your wealth building journey today. So before we get started, I'm Lisa J. Stocks. Make sure to like, subscribe, hit that notification bell, and check out my referral links. Over the last few years, I've become more focused and hands-on making sure that every last dollar, whether it's an investment or savings, when it comes to my money, every last dollar is working till its full potential. I want my money to make more money. And so I've evaluated where I had all of my money sitting. And one thing that I discovered is that the money that I had sitting in an IRA from my first job was invested into this fund, MXBDX, an Empowerment Lifetime 2040 target dated fund. Year to date, it's up 8.19%, which may not look too bad. It has an expense ratio of 0.90%. Just to touch on a point that led me to my decision that I was going to close this account and open an IRA over at Fidelity, move all of my funds over there and get started. And one of the first investments that I got started with is FXAIX, the Fidelity 500 Index Fund. I did this back in September of 2023. At that time, I wanted to make sure that all of my money was being maximized. I wanted to be on track for early retirement. I wanted my daughter's accounts to be in place and growing to give her a head start. All of the money for anyone in my household to be growing at its full potential. This fund is a low-cost, diversified way to own a piece of America's biggest companies. I've incorporated this as a part of my way to build financial freedom. It gives direct exposure to those 500 largest U.S. companies. As you can see, the share price is currently to 1877. This mutual fund that tracks the S&P 500 is weighted by market cap, and it's going to give you a piece of these top companies: Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Google, Tesla, to name a few, all by investing into this one fund. As of June 30th, the highest concentration of the fund is in Nvidia at 7.33%, followed by Microsoft at 7.04%, and then Apple at 5.83%. So these are the biggest companies in the US. They drive growth, and by investing into this fund, you have exposure to them all. Plus, that low expense ratio that's not going to eat away at your returns. Compare that to a managed fund, some of these target dated funds, like I just shared with you, and you'll be saving thousands. Low cost means more money compounds for your retirement or investment account. So FXAIX, which mirrors the S&P 500 index, has delivered an average rate of return of about 10% over the long term. But like I said earlier, investing has its ups and downs, and the S&P 500 has seen rough years. But you just have to understand them, stay focused on the long-term growth. For example, back in 2008, we were going through a global financial crisis triggered by the housing bubble, bank failures, many companies' stocks pulling back. But patient investors that just held on saw a full recovery by 2013. More recently, in 2022, inflation, rising rates, some of those big name tech stocks being hit hard led to a decline when it came to the S&P 500. But then in the 2 years following, the index was up over 20%. And then most recently in 2025, we had a huge dip in April, Trump's liberation date. Tariffs sparked a sell-off, but the S&P 500 has rebounded and is now up 26% from those lows back in April. Evaluate what you are invested into. Don't freeze up or sell out over fear when we're going through these rough times. Stick to your long-term plan when it comes to an investment that is worthy of being buy and hold forever status in your portfolio. When it comes to this investment choice, you're betting on those 500 largest companies index that has proven that it recovers time and time again. That built-in fees and diversification is why I have incorporated it into my portfolio as a rock solid foundational investment. When it comes to this, companies come and go from time to time. There is a strict criteria that has to be met to be a part of the fund. You must be a U.S. company listed on an exchange like the New York Stock Exchange or NASDAQ, have a market cap of $22.7 billion or more, positive earnings for the latest quarter and past year, at least 250,000 traded shares monthly. Based on that, there are additions like the trade desk, which was just added this week, and Coinbase, which was added back in May. This boosted the price of trade desk. We can see the trend up since May when it comes to Coinbase also, as funds like FXAIX buy in. Taking a look at some companies that were removed in 2025, I'd say Discover is the most notable name that recently received the boot out of the S&P. So these type of changes keep the index fresh, and FXAIX automatically adjusts so you are always owning those top 500 companies. Now let's talk about those dividends. FXAIX pays a dividend quarterly, but the amounts vary. The current dividend yield is 1.2%. The last dividend payment was 0.65 cents, and that was paid out just a few days ago in mid-July. Here's a look at the last few dividend payments, and I'm going to touch on a few reasons why these dividend payments vary when it comes to this fund. Company payouts. The S&P 500 companies set their own dividends based on profits and strategies. Market conditions. Downturns or rate hikes can lead to dividend cuts. Seasonal earnings. Strong quarters boost payouts. Weaker ones do not. Capital gains. FXAIX may distribute gains from stock sales, adding variability to those dividend payments. And timing. Companies pay dividends on different schedules, so quarter payouts fluctuate. My last quarterly dividend payment was $485.29. I'm reinvesting these dividends in order to add to my position, build up my portfolio. Right now, my goal is long-term growth. So I have on the drip automatically to reinvest my dividends right back into more shares of FXAIX. And this time around, I was able to pick up 2.232 shares from that dividend payment. Now on to the rest of my results. I have 745 shares with a current value of close to $163,000. I'm up 36.34%, which is a gain of $43,443. This investment continues to give me diversification, low risk across various sectors, low costs from that 0.015% expense ratio, which is those fees that you have to pay for management costs when it comes to a fund or ETF, exchange traded funds. And of course, I'm also getting that consistent growth that builds over time and historically always recovers. So I'm focused on investing into America's top companies. I'm not over here always stressing myself out, trying to chase hype stocks, trying to time the market perfectly. I do options trade, invest into individual stocks as well as crypto, but I find the balance that is right for me. I use my stop loss on things that are more speculative, but I also sleep well at night knowing that I have investments like this that I'll be holding long term, allowing to grow and build. Now let's take a look at the upcoming earnings. And there are a couple of key names that have those larger market caps that drive the S&P 500. So we have Tesla, which analysts expect strong Q2 25 deliveries. Alphabet, aka Google, which will be on the lookout to see their AI and cloud growth, as well as tech company Intel. Whether these companies are thriving or they have some struggles, we won't be so heavily impacted if one of them do pull back, because we are not invested into just one company. We are invested into hundreds. You don't have to do anything fancy to be on track to have $1 million portfolio. Just have a solid plan, incorporate funds with a proven track record, steady growth, and be a disciplined, consistent investor in order to build up your portfolio. I just got started reinvesting just over $120,000 back in 2023, and I've been able to grow my portfolio by over $44,000 in that time frame. I have other individual stocks in this portfolio also that I invested into with that initial amount that I brung over from empowerment. Drop me any questions that you have. Subscribe to the channel so you can come back and continue to be on this journey with me. Let me know in the comments, what's your favorite mutual funds or ETF? Make sure to give this video a thumbs up and hit that notification bell so you can keep up with all of my videos and live streams. And don't forget to check out my referral links for Keenan Grace's Discord, where I am a coach. And please note, I am not a financial advisor. I am just a regular investor sharing my journey to become financially invincible.